Back with Bobby and JJ Radio. If you're just tuning in, we had a great segment with Bob Gardner, and we covered everything about the housing trends that's been going on for the last couple of years from 2013 to the present moment, and some projections of what Bob feels that may or may not be happening depending on. We talked about interest rates. We talked about how expensive land is. We talk about how there's a scarcity of properties under $200,000 and why the market between $200,000 and $500,000 is the sweet spot of the San Antonio metro area now. If you missed any of that segment, do not fret. You go to bobbyandjjradio.com, become a fan of our show. This show will be podcastable, I don't know if that's a word, or downloadable on
Podcastable.
On SoundCloud every Monday. And if you want to see this good-looking gentleman, Bob Gardner, we will be on YouTube in a couple weeks because all of our shows are videoed and YouTube. So let's get back with Bob. So Bob is we're going to talk a little bit about house or home price appreciations. So tell us the difference between a median sales price and an average.
Well, people want to talk about price appreciation, and they usually refer to the median, the change in the median or the average price of homes. You see that on a national basis and even on a local basis, and that really doesn't tell you a whole lot. I'll give you an example that as the market in San Antonio has moved from being much more concentrated below a price of $200,000, and much more of the market is now selling between $200,000 and $500,000.
Right.
Then both the median and the average tend to go up, and that's just mathematics.
Right.
That really has very little to do with actual price appreciation.
Sure.
Except that a greater percentage of houses are selling at a higher rate, at a higher price range.
Right.
So if you really want to know what's happening, you've got to take a look at a subdivision.
Right.
And specifically, and you've got to track the price per square foot of the sales that took place in the subdivision.
Sure. And you've done this for how long, Bob? You've been tracking some subdivisions for a very long time.
Well, since 1987, and I won't get off on why we did that, but it was a recessionary trend in Texas, and we felt we had to know more about changes in value. But it ended up being a good thing, in both for the companies I had and myself, so we keep it up today. But at any rate, what I have learned, so when I read a lot about people want to say that how quickly prices are going up. I had somebody the other day say to me, well, I understand home prices have gone up 30%. Well, I don't know where they get that.
Sure.
But I can't find where home prices have gone up 30% any place in San Antonio. And it's really not important. It's only important to know the facts as they are.
Sure.
And the place, and what I'm about to tell you is just something I've observed over a long period of time.
Sure.
When you look at price appreciation, the first place that I always take stock of is what's happening in the Alamo Heights School District with home price appreciation in that district.
Sure.
Because it's either going to start to go down because you're hitting some sort of recessionary trend, or if you're coming out of recession into a recovery, then you'll see prices start to rise there quicker than you see prices rise anyplace else.
So if you wanted to have a crystal ball, that crystal ball is the price per square foot of what's happening in the Alamo Heights Independent School District.
Yeah. So and there's a lot of sales, and I watch it very closely because I know that if you come out of that, like we did a couple of years ago, we started coming out of the recession that set in 07, 8, 9 around here. So you see the prices go down, and then I watched that area in the Alamo Heights area, and I started seeing prices go up. But what happens is they go up, and they price a lot of people out of that market.
Right.
So the next thing that happens is that people start going out. They start going to places like the Creeks and the Inwoods and things of that nature, the Deerfields or wherever it is they're looking for. So they find the product that meets the price that they can afford.
Right.
And so then when I see that start to take off, when I see those prices rise, I realize that the market is now beginning to fully recover.
Sure.
And when then you go outside 1604 and you look at the Stone Oaks or you look at Fair Oaks and you see prices starting to rise out there, now the entire market area has shown a great recovery.
Right.
And then one of the things that I've noticed between 2013 and 2014 is that sales in the Alamo Heights area have slowed down because a lot of people have been priced out of it. And so then you see a slowing of price appreciation there. And then I see a much quicker between 2013 and 2014. I see big price appreciations in areas that have been very dormant for a period of time. One of the best examples is an area like Elm Creek, an older area built in the 80s.
Right.
Well, the prices between 2013, now this is the average price per square foot, between 2013 and 2014, prices went up 17% in Elm Creek. So the people that went in,
tell me this last year.
So
you got to kick us under the table.
So the people that that I talked to about the fact that I thought that Elm Creek was underpriced in 2012, if they went out and bought, they reaped the benefits of that in 2014.
Right.
Deerfield was up between 2013 and 2014, up 6%. Right. Inwood along 1604. The 10-year price appreciation average for Inwood was 1.5%, but between 2013 and 2014, prices increased 11.5% in Inwood. So after going through that recessionary period and seeing very little price appreciation in some of these areas, now we're seeing a little bit of a slowdown in the Alamo Heights area, but big pushes last year. Now, where will that take us? Well, now it tells me that places like Fair Oaks and Stone Oak did well last year. It was up 5.6%, and its 10-year average is 2.2%. So this whole recovery is starting to reach further and further out toward Bernie and up 281, and that's a very, very healthy thing. If you get around further west of town and you look at Alamo Ranch, and which is a very, very good planned unit development, prices last year were up 4.1%. That's very positive. But, the biggest price changes that I see occurred, the ones I really looked at specifically, occurred in a place like Elm Creek. It's 17%. But overall, when I look out across a 10-year period of time, from 04 to 14, home price appreciation in San Antonio is a little bit higher than the average inflation rate. And inflation during this period of time has been 1.5% to 2%, and home price appreciation in this area, on average across the city, is, if you just took the whole thing, it's about 2 to 2.5%. So we're very lucky. We're lucky in San Antonio that we have price appreciation in our city that grows faster than the inflation rate.
Right.
So that's money in our pocket, and that makes housing a good investment for people.
Sure.
What about downtown?
Well, downtown, I love downtown, and I spend more and more time, having fun downtown. But when I look down there and I see, and really, it's so easy to see the reemergence of downtown. All I have to do is go to the Pearl, and I see everything that's been built at the Pearl and is under construction at the Pearl, and the people that are down there having a good time, and the apartment projects that are being built along Broadway. And when I go down in Southtown, and which I do frequently to enjoy and to eat and do things like that, and I look at the amount of people, and I don't care what day it is. I was down there last Monday night joining some friends for dinner in Southtown. Place is packed. So there's an energy level about downtown that is growing, and I think it is very good for the city that happens.
We were talking about how excited we were to have you on the show because, Bobby heard a talk about that you did.
This was 2007-ish, 2008-ish. Our team leader, Wendy Harrelson, went to your
forecast,
and she came back and said, downtown,
Bob said downtown.
Bob said downtown. So I bought a loft downtown. 2 years later, I bought a condo in the Alteza. So because of you, I live where I live. It's all your fault.
And he's done well. Same thing with me. In 2006, I went to one of your talks, and you said Colonies North is very underpriced right now. It's a great location. It's across from USA. Everyone should, if you can get a rental property, do it. So I did it. It's been a blessing for me and my family. So we're not saying you're Nostradamus, but we're saying you're the closest thing to it. And I know that you're in the business. You've been looking at this stuff the longest, and so obviously that's why you're the resident, expert on this kind of stuff. But we just wanted us young guys, we look to Bob to make some moves sometimes in the real estate industry because we know you've been looking at these stats for a very long time. We're gonna get back with Bob here after a quick break. If you missed anything of this segment, go to bobbyandjjradio.com. Be a fan of our show, and you can get this information on SoundCloud.